Welcome to the Techno Fundamental Report for the 12th of March. The difference between successful people and really successful people is that really successful people say no to almost everything. Howard Marks. In other words, be discriminating. Don't just say yes to everything. All stocks are not going to work. It's going to be it's a process, and it can be a difficult process. Skillful risk control is the mark of the superior investor, Howard Marks. Basically, portfolio management, risk management, the difference between a professional investor and an amateur investor. Most amateur investors do not practice risk management, and they should. It's just something that needs to be done. So some more quotes for you. Jim Rogers, most successful investors, in fact, do nothing most of the time. So like Jesse Livermore said, he made all of his money in the sitting. Now, that doesn't mean buy and hold. What that means is that you wait for the right setup. Owning stocks is like having children. Don't get involved with more than you can handle. Peter Lynch. Again, back to diversification. You don't want to have more investments in your portfolio that you don't understand. Intelligence consists in ignoring things that are irrelevant. Nassim Taleb. Again, we don't want to just look at everything. We want to look at only things that are relevant. All the math you need in the stock market you get in the fourth grade, Peter Lynch. This, technical analysis and fundamental analysis, once you get a handle on it, it is incredibly simple. Now, last week, oil surged 35% for the biggest gain in futures trading history dating back to 1983. So you can see here we've been in this downtrend for oil. Now, because of the war, we've gotten a major breakout. It is pulling back, so we'll just have to see. Is this a reversal of trend, or is this just kind of a one-time thing? We'll just have to see. Now, I work with a group of analysts, and one group I work with out of California sent me this report, which basically was a very in-depth report. So I just went ahead and broke it down into the key factors. And they say, as we see it, there are a multitude of negatives, both well-established and newly emerging. That may keep the pressure up on stocks until they are resolved. The Fed also may soon be forced to act, but it may be too little too late in the face of a tidal wave of negative developments currently besetting the market. So we all know about the war, and we all know that everybody is focusing on that as the reason the market's having difficulty. But there's much more going on than that. So the first one would be the war, geopolitical conflicts. Another worry the market has is higher and sticky inflation. Recession and economic slowdown fears. Private credit and credit market fears. High valuation and bubble risks. Technology, AI sector concentration and disruption. Fiscal debt and government bond turbulence. So we have 1, 2, 3, 4, 5, 6, 7 things for the market to worry about. So the best thing I think to do is let the market tell you when these issues are being resolved, if they get resolved. So let's look at the market through 5 indexes. Now, we use an indicator which is involved with these indexes called the tides. So the tides come in, the tides go out. But the main message is you don't want to have to swim against the tides. It's very difficult. So this particular indicator works this way. You break below these moving averages, 25-day and 50-day moving averages. And if the lower moving average turns down into a downtrend, that is a negative. So the NASDAQ is actually on a negative tides reading. Now the mid caps, we have a different situation here. Now we have broken down below the lower moving averages, but the lower moving averages are just kind of flattening out. So we'll have to see on the mid caps. They have been one of the stronger groups. New York Stock Exchange, all the stocks on the New York Stock Exchange, pretty much a defensive index. You can see the breakdown, but the moving average is basically just flattening out. But if this index continues to stay down in this area, this has to turn down. So we would get a sell signal at that point. S&P small caps. Again, we've broken down below the both moving averages. The lower moving average is basically just flattening out, but the pattern is just not positive. So again, we continue to tell our clients and friends to continue to stay defensive here. This is not a time to be aggressive, and we will take a look at the aggression index. S&P 500, same thing as the NASDAQ. We've gotten the death cross. We're below the lower moving average. It has turned down. So basically, the tides are out. Now, in past videos, I've talked about Jesse Livermore. And let me move this over here or move it up here. But anyway, he says don't buy breakouts. And what he means is you buy breakouts only when they've proven themselves. So what we're trying to do here is basically, understand what the institutions are doing. And I'll give you an example here. This is a stock that we own, so I have to disclose that. Now, this is Vertiv Holdings. This is a company that makes industrial grade cooling systems for these data centers that we hear so much about. Now you can see here since October, this stock has basically just been moving sideways. So there would have been no reason to be in the stock, that it wasn't doing anything. But then they announced earnings here recently, and you got a breakout. You got a breakout. Now, Livermore would say, don't buy that breakout. So, again, you want it to prove itself. Now, it basically somewhat failed. The breakout somewhat failed. Then it continued to consolidate, a little bit of difficulty in here. But then we get another surge in volume and another breakout. So it's starting to prove itself. Now, at IBD, Investors Business Daily, talks about how you should wait 3 days during and after the breakout. So we've had 1, 2, 3 days here where this stock is starting to somewhat uptrend. So we'll see. I'm not sure this is going to work, but I'm just saying you need to let these breakouts prove themselves. And so far, Vertiv appears to be, proving itself. Now here's another one we're looking at. Now this is on my watch list. I do not own this stock. Century Aluminum. Again, we've got, an extended period since October, a flat base, then we started to uptrend. Now we've built a new base and we're starting to break out. Now this is pretty much, in my opinion, you had these breakouts back here that pretty much failed. Now I would want to wait on this. I would want to be patient and wait to see if this particular breakout proves itself, which means it could turn right around and come back down here, but then again, if it stabilizes and develops an uptrend, that's what we're looking for. Planet Labs, this is another stock we're looking at. Okay, you got your initial breakout here back in December, rallied to a new high, but then failed. However, we started to consolidate again. Now, we're not getting any kind of breakout here on volume, so we're just continuing to watch. We're not buying this position, we're waiting. Now, Quanta Services, which is heavy construction, is definitely started an uptrend, a little bit of consolidation in here, and it's trying to break out. But like I say, I got to let this breakout prove itself. Now, let's take a look at the aggression index. We're seeing a little bit of improvement here. We got this major breakdown at the beginning of the year. It came down into this low level here. And we're back above the lower moving average, and it's starting to somewhat flatten out. So maybe the worst is over according to the aggression index. So this would tell me maybe I should nibble a little bit. So, for example, I own one position, which is Vertiv. But if this continues to improve, I will increase my exposure. So looking at it on a long-term basis, the aggression index, it's just not looking good. The problem here is that we could get this drop like back here in the past. You get somewhat of a rally, and then you fail again. So even though we're starting to see some improvement here, again, just like individual stocks, this particular indicator has to prove itself to me. It's got to show that it's going into an uptrend after it's been in somewhat of a dramatic downtrend. So if you have any questions, please let me know. Thank you very much.